Welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. In this video, I want to talk about Cathie Wood and her ARK funds. This year for Cathie has been absolutely god-awful. In a year where the S&P 500 year-to-date is up 27%, in the year where the Nasdaq is up 28.5% year-to-date, the main flagship fund is down 15% on the year. That's absolutely awful when the market is beating you that badly. However, if you zoom out a little bit, you see that over the last 5 years, she's absolutely crushed the market. Whereas the S&P 500 is up 111% over the last 5 years, and the Nasdaq is up 234% over the last 5 years, her flagship fund is up 405%, absolutely crushing both of them. And one can expect that after a huge, massive run-up of 313% in about 11 months, that a performance like this could be a little bit expected. And although I am a fan of Cathie and her philosophies long-term, I do have a lot of criticism for her short-term trades. Now, it's understandable that a lot of people have sold out of her funds, creating outflows, and that she has to sell some of her stocks in order to raise capital, but at the same time, if you watch some of her trades, they just don't make sense to me. So this is a random email from November 15th of the trades from that day from ARK Invest. So for example, the sell of the Zillow shares, this comes after a week where she was buying the stock, but here she was selling it at 25% lower. Now that could be accredited to the fact that something about the fundamentals had changed about the company. Zillow had that big implosion on their home flipping business. I don't know, just watching them day in, day out, like one day she'll be buying Google, the next day she'll be selling Google. I get you can do that, but when you're one of the biggest and most popular fund managers, you're going to get criticized very specifically. Remember, she's supposed to be a professional and we're all the retail. When you go to Cathie's ARK.com, we all know she hit a home run with Tesla with a cost average of 325. It did used to be a lot lower, but she's been buying into it over time. But I wish she would just leave it. The weight of Tesla is about 10.5% across all of her funds. However, she's allowed to have as much of a weighting as she wants. She just can't buy more if it's above, I think, 10%. But knowing she is one of the biggest Tesla bulls out there, it would make sense just to leave it. Because what she's doing is she's selling them and then buying all these random companies I don't necessarily agree with. So next you have Teladoc Health, where she's underwater with a cost average of 164. Now it's trading at 103. This one was 300 earlier this year, which is crazy. Coinbase, she's done well on, even though she started buying it at the very beginning after the direct public listing. But that's what Cathie does. She buys stocks regardless of their valuations, really. Just says in 10 years it's going to be higher. And I guess that's one way to go about it. But there's just so many better ways to scale into it. I don't know. That's just my opinion. Unity, she's done very well on. Cost average of 104, now 176. Zoom, she's gotten obliterated. Cost average of 362. It's now trading at 206. I think it had a 52-week high, I believe, of 400. And crazy to think that Zoom had a 52-week high of 486 earlier this year. So I don't know. A lot of people have lost faith in Cathie, especially over the last 6 months. There was still some hope back earlier this year, even when things were down, saying, don't worry, Cathie's got this. But then as time's been going on and her funds have been going nowhere, people are losing faith day by day. We can see with ARKW, this one is down 3.75% on the year. ARKF is down 3.63%. With a lot of that weakness coming lately, because anything fintech lately has been getting absolutely destroyed. ARKG is down 31% on the year, crazy. ARKQ is up actually 8%, and ARKX is down 2.41%. This is a weird fund. I don't even get why she has this one. Is she just trying to make money off the expense ratio? Like, I don't even know what's going on in that case. And when we take a look at the candlesticks, I don't actually necessarily like to look at this one technically because of the active management, because one day you'll have 10% Tesla and, I don't know, 5% Square. And the next day she could buy a bunch of Square, and then it's not the exact same fund that it was the previous day. Let alone the last week, month, year, pretty much. Remember when I first got in the market, Tesla was number 1 and Square was solidly number 2, and then over time that became Teladoc and whatnot. Don't get me wrong, the technical analysis does work for the most part, but I mean, if you want a more precise indication, just take a look at the specific stocks themselves. With all that being said, I'm going to draw a line anyway around this 105 level where we didn't quite touch it over here in the beginning of October. We fell below it during May time, and we found resistance back in October of last year, as well as November before this huge epic run. What do you think, guys? What do you think of Cathie and her funds? Are they going to recover? Are they going to continue bleeding out? Is she right? Is she out of her mind? Let me know your thoughts below in the comments. If you're new to the channel, welcome aboard and hit that subscribe button. As always, smash that like button, and I will see you in tomorrow's video.